Hello traders, Gary Wagner here, just about 11:20 in Honolulu, 4:20 in New York. It is Thursday, December 15th, 2016, and this is the Daily Report for Gold and Silver. Tremendous pressure put on the precious metals markets today. Let's take a look at settlement prices. Gold closing at 1130 in terms of COMEX futures net change, off about 2.9%, almost a 3% drop in value at 1130. The low today was 1124 and the high 1146. As I said, a dramatic decline in pricing. Silver, however, did not fare as well, climbing down substantially, off about 7% on the day, losing $1.17 per ounce to close at 1604. The low 1592 and the high 17. So we've seen not only a tremendous range in silver, but the market breaking back below 16, only to settle just a few cents above that. On today's show, we absolutely want to cover current support levels we could look for in the precious metals markets. Want to take a look at the U.S. dollar also. We've enabled trending markets for everyone to see the trending markets today so that they can look at a special report, a historical perspective on the dollar index. But first, let's take a look at some of the gold charts today. So traders, absolutely no doubt we have seen a continuation of this massive downside pressure exhibited in the precious metals market, specifically gold as we look at it, that really began to accelerate that sell-off just following the presidential election last month. Of course, back at the beginning of July, we hit the first of our double tops, which would culminate or turn out to be the yearly high at about 1380, 1382. And since that point, we have seen this market drop tremendously, now trading below 1130 per ounce, currently at 1129.90. Now, our current target for precious metals gold pricing really doesn't come in until about, call it 1110 to 1115 in that area. That is based upon a 78% retracement. And as you know, for the last couple of weeks, I have been talking about the fact that I think we will see lower pricing. We certainly are getting that. As long as these fundamentals that are currently in play continue, we could see continued pressure on both gold and silver pricing. We've been talking about that for a couple of weeks. The new piece of fundamental data that entered that mix that really accelerated this sell-off was the announcement by the Fed that they were looking for more rate hikes than originally perceived and are now shooting for 3 rate hikes rather than 2 next year, the dot, so to speak. However, we have to take that with a large grain of salt, maybe a pillar of salt, in that if we look at the Fed statements in prior years as to their dots or their policy for an upcoming year, we have seen continued points in which they wanted to raise rates, but for one reason or another did not. And in fact, the rate increase that we witnessed yesterday was so necessary and important, I believe, to give any kind of credibility to statements made by the Fed, that we would have seen a much more detrimental reaction in these markets had they not raised rates. Now, that was largely factored into the market. It's this new steeper climb or more rate hikes next year that has really put this pressure on the precious metals and, more importantly, taken the U.S. dollar to highs that we haven't seen since 2002. But we're still well off of the highs that were in 2002 because they come in at around 120 on the dollar index at 103, which is why we really want to look at that historical perspective. So again, I mentioned yesterday that if you aren't flat, if you aren't short in this market in terms of gold, you could consider that. People initiating short position picked up a little bit of equity, but I do know that many of our subscribers have been short and have been riding this movement down for quite some time because, as I stated 2 months ago and even a month ago, when we are flat, aggressive traders could be short and actually in this case should be short, because we see such dominant pressure to the downside, and it is our current market assessment that that will continue. So traders, what a difference a day makes. Silver literally falling out of bed. We're looking at a daily chart, standard candlestick format. And if you recall from yesterday's show, I talked about the fact that what was unique in silver as we looked at it in relationship to gold was that silver had held its price point well above the 61% retracement. In fact, it came down and we had a significant bounce in the market. And we were maintaining well above this price point, whereas with gold, we had precipitously fallen below the 61% retracement and had no technical signs that it was going to recover. We have definitely seen a severe and dominant break to the downside, taking this market to lows that we haven't seen really since June of this year, and that's when the market was trading at 16. Now, considering the rise that we have seen this year in silver, in other words, silver was trading at about 14. It traded up to 20, actually 21 if you take this extreme high. And I talked about the fact that we want to be short gold yesterday and also look to buy silver, but not to buy silver until it came down and tested this particular support line in silver, which was still a support line as of yesterday. And then on some sort of a bounce, you would initiate a long position. In other words, to go short gold, but to look to pick up silver at the point in which it hit this bottom and went up. Well, nothing could be further from the truth, because like a hot knife through butter, silver pricing literally broke below this particular line, and now this channel line here is going to be a resistance point rather than a support point. But that also matches with the 61% retracement, which gives us the following question: where could we find effective support in silver? Now, there's a couple of targets that we'll want to look at. If you take a look at these highs here, which occurred in April, or these highs here, which occurred in February, and draw our line across, what you'll see is that's pretty much where the market closed at. So we could look for some support to come into this area. However, if we see continued weakness and continued strength in the US dollar, I would look for the market to continue lower, trading as low as $15.50. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review. What a week we've seen. Talk to you then. Bye-bye.